Everybody, good morning. Good morning, good morning. Rob, Wade, Infinity, Don, Gaten, Rex, Rungamer, Eric, Dan, Don, Steven, Nina, Craig, Jason, Sergio, Dave, Brian, Anthony, Francois, Kevin, Zub, Diane, Jan, Don, Sylvia, Sylvana, excuse me. Can't pronounce things. Might get myself all tongue-tied. And Kathy, good morning. Welcome. Glad to see the members here. Kathy, Don, Brian, Roland, Dan. Good to see the channel members showing up in force today. And if you want to be a channel member, link is in the description. And, helps support me. And you get extra content. It may not be trading content. It may be just how JT lives life. So far, financial lesson in trying to pay off a vehicle. And the check is out for delivery. So we'll see what happens here in a minute. In the next, I guess, hour and a half. Anyway, I'll probably have an update on that later today. We'll see. And then, of course, there's going to be the update if it actually works, the plan. I may, share the plan with what I figured out to do with the bank. Anyway, so there'll be an updating ongoing saga on that story in the background. So welcome, everybody. Nancy, Al, Merle, Rosalind, good to see you as always. How's New York City? Busy place up there. Ed, good morning. And NVDA yesterday, holy moly, set the record for the largest market cap loss in one single day. By the time the after hours was closed, something like $300 billion of market cap had been lost off of NVIDIA yesterday. I mean, it was big. I mean, last month was big, but this single day, we had a bigger decline in NVIDIA yesterday. And all trading involves a substantial risk of loss. Somebody was talking about how NVIDIA might drop, and I don't know who that might have been. Sometimes somebody gets lucky. Anyway, past performance, not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. Let's be honest. There's a substantial risk of loss. If you buy any option, any stock, any option, any crypto, any forex, any futures, any treasuries, any bonds, there's a substantial risk of loss. You may be like, well, treasuries, I thought those were safe. Yeah, safe until the fiat system becomes insolvent, especially in the United States. If you desire personal financial advice and you need somebody to tell you what to do, you need to hire, consult a financial advisor. Even a insurance-backed life insurance policy has risk of loss. Think about it. What happens if that insurance company that was backing, if the government doesn't step up and fix it, like if that insurance company goes under, however unlikely that may be, who's going to pay the obligation? I mean, I'm just saying. No, there's virtually no guarantees when it comes to investing money for other people. And I'm telling you, most people out there are not looking out for you. They're looking out for themselves. They're just trying to make some of your money and some of their money. And if you don't take a vested interest in yourself, well, nobody else is going to look at it for you better than you are. And if you don't care, oh, my goodness. Got the watermelon monster today. Got the green lid, as you can see. Kind of clear. And, be careful out there. I'm perma-cautious. That's what I would say. Some people are like, you're perma-bearish. Not really perma-bearish, not really perma-bullish. I'm perma-contrarian and perma-cautious. So here we are. On Wednesday. Golly, halfway done the first week of September. Golly, burning it down. We've got FOMC coming up right here. Well, it starts 17th, going to the 18th, right there. Are they going to cut rates? Here's the deal. Like, they're pretty much time for a policy change, blah, 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 right? So what if they only cut a quarter point? They keep saying they're going to be very cautious about cutting rates, right? All the Fed members have been out speaking. They keep parroting the same thing. Like, we're going to be very cautious about cutting rates. We're going to take it slow. We're going to take it easy. So what if they only cut a quarter point? And the market's been expecting that for 9 months, and we're disappointed. The reaction is a disappointment and a knee-jerk reaction. Oh, they're not cutting rates fast enough. I'm going to add some protection before the FOMC meeting for downside. I think it could be wise. Now, we could get a pop out of FOMC, so it's wise not to risk, all your money. But I think it could be wise. Perma, be careful. That's right, Jason. 100% right. So Wednesday, here we are. Not anything. We got Great White North going to report some stuff. We had trade balance news coming out. We got JOLTS jobs openings coming out at 10. Factory orders, some total vehicle sales, beige book. There's not a ton of stuff today. Just not really market moving. Any of these could create some volatility, some knee-jerk reaction, some surprise numbers, whatever, especially in certain segments. But I don't know. I've been watching Car Dealership Guy, and vehicle sales actually picked up in August. New vehicle sales picked up like in a big way in August. If you haven't seen Car Dealership Guy, he's on X or Twitter or whatever you call it. He's also on YouTube and 900 other platforms. It's an interesting little take. He throws up like what vehicles are on 0% financing, what vehicles are not moving, what brands are having trouble moving vehicles at all, and it's interesting. But vehicle sales pretty much picked up across the board in August. Now, the other interesting thing going on is that used vehicles, because of their appreciation, when they get damaged, Wrongemer, testament to this, when they get damaged with seemingly minor damage, it totals out the vehicle. So we're removing a lot of reasonably well-working used vehicles out of the pool because the cost to repair body damage and stuff like that is more than half the value. And they're taking them out of the pool. And, who could afford to drive around without comprehensive if the vehicle's still worth $16,000 or $20,000, even though it's getting to be almost 10 years old? And so then you get a little damage, parts and labor, ridiculous, and takes it out of the pool. So then you have those people going to buy a new car or a new used car right there. Even at the high 6-7%, 8-9% financing, even up to 14% on some used cars, 14-15% financing on used cars right now. So that'd be interesting to see the cars numbers. And tomorrow we do have unemployment claims, as always. Not really been much of a market mover because we all know they make up the numbers. Then we have the ISM services. We have the final PMI. We get all these things, and then we get the hour on Friday. We get these numbers right here, pre-market, which is the jobs report, the monthly jobs report, the unemployment, non-farm unemployment, as they call it. And then we get some Fed members speaking throughout the day. It's interesting that Waller is more important than Williams. Whatever. We'll see what happens. It's probably the event they're speaking at. And that'll wrap up this week for economic news. So not a lot I really expect, but next week coming up, nothing Monday, nothing Burger Tuesday. Get some CPI on Wednesday, get the PPI on Thursday. See, that's normal. When they put the PPI before the CPI, I always wonder, what's going on? So CPI comes out, then we get the PPI the next day. It's Consumer Price Index and Producer Price Index. And that's pretty much the big news. We get those consumer sentiment and inflation expectations right there from University of Michigan. That's pretty much next week, and then we'll roll right into the FOMC the next week. So, yeah, not a lot cooking. Questions, you can let me know in the chat. So the meeting starts the 17th. You know, the way the FOMC works. I close the tab. If you're not sure on how this works, it's a 2-day meeting. So it starts the 17th and rolls into they do the announcement on the 18th at 2 p.m. and then Powell speaks at 2:30. Right there. Maybe like, how do you get here? It's just the federalreserve.gov. Federal Board of Governor, whatever. It's kind of funny because the Fed's not part of the U.S. government, but it is a quasi-governmental thing. So they have a .gov domain. Then we've got this coming up right here, and then we've got December. So we've got these two after the election. 3 more left this year. Surprised they haven't put out they got the next calendar. I was like, surprised they haven't put out the next calendar. They've got the next 2 years already planned out. There's January, March. Yeah, so we'll do that one on the 18th of December. 17, 18 December. Whatever it was up there. Yeah, 17, 18 December. And then roll right back into another one in January. Right near the end of the month. And then nothing in February. March will be, wow, that's a pretty big gap right there between those. And then I guess it's every 6 weeks or so. In May, June, July, September, June and July, back to back. September, October, and December. And then 26, there you go. So these are you can go through and set alerts on your phone already for all these days. There will likely be market volatility on those days at 2 p.m. There you go. Already planned out. Already know what it's going to be. Alrighty, moving on. So, NVIDIA. Whew, baby. Pull that up. Look at that candle. So we closed. My goodness. Down pre-market. So we closed up here. This is why it was such a large market cap drop. We closed up here. And then by the time we closed the day, we were down here. And now we're down here, 105.18-ish. We lost almost 12%, 14 points. And when we go over here, 14 points, you lose $24.5 billion of market cap for every dollar you drop. Like, how do you know that, JT? Well, that's how many shares are outstanding. That's how many dollars it takes. Everybody makes $1, everybody loses $1. That's $24.5 billion. $24.53 billion times the crazy 1137 drop. But that's not even from the. Let's just go to the close right there. Just to the close. 1155 from the open over here. I think it's 1137. But then we're going to open up even lower. Yeah. Let's say $13, $14. Let's round it off to 14. $343 billion whacked off their market cap right there. $1/3 of $1 trillion, basically. Isn't that crazy? Isn't that crazy? Like, think about that for a minute. $1/3 of $1 trillion gone off NVIDIA in like one day. That just kind of blows my mind a little bit. You'd be like, well, what's their ranking? Yeah, right here. This may or may not be updated. And they're down to number 4. They're dropped out of the Trace Trillions club right there. They lose another $700 trillion or $700 billion. They'll be below Google. Got a little fluff in there, but that would be another $28. No, basically $30 more off their price, dropping below Google. There's the market open. Gurgavin on X, Twitter, whatever you want to call it. Gurgavin, he's a funny market analyst. He always types in all caps, and he was like, "What if? What if?" He's like, "What if this was the all-time high on Nvidia and we never see another high on Nvidia?" Look at that, lower high, lower high. It's very reminiscent of Cisco at this point. Let's split. I'm just, set the record. So Meta had the record for the largest, Facebook had the record for the largest market cap drop ever. Right back over here. 1 day drop. Right back over here. Right there. And guess what? NVIDIA just took the crown. And a dollar on NVIDIA is only $2 billion of market cap. It's kind of interesting, right? You take the number of shares, multiply it by $1, $1 for everybody, $1 per share, takes $2.18 billion to move NVIDIA. I mean, to move Meta a dollar. And NVIDIA, with their crazy stock split, has 24.5 billion shares out there. So $1 move, that's $24.5 billion of market cap added or taken away. It's just the law of big numbers. The more shares you have, the more it suppresses price moving on your stock. I think it was probably not a smart move to do a 10-for-1 split, but it's just me. That's probably going down to the target zone. All right. Jump back to the morning monster list. I do have a couple bonus trades coming up. Dun, 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 dun. So SPX. Well, here's the situation right there. In red and green. We came down. Look at that. Came right down to the gap. Basically held right at the gap. If we can hold it, good. We may retest the gap. We may fill the gap. And here's the crux, though. If we get below the gap, that's where things can go really, really wrong, really, really fast. Possibly down here. That would be the weekly roadmap line. Right there. We need to hold this area right around that 618. The red zone becomes important once again. That was the red zone. If we had turned down there, we're probably going down here. We went a little higher, made some new highs, didn't poke out to an all-time high. We're still likely to go up, higher likelihood to go up than down unless we break support. If we break support, this comes back into play very, very quickly. Very quickly. All right. Bum, 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 bum. Awesome, Dawn. Awesome. It may never go back that high again. Be careful. And we need to hold here. Now we could go, just a little deeper. And my real warning is below 5,300. We get below 5,300, probably taking it down here. So there are multiple lines in the sand. If we get below that 618, we're probably going to touch this right down here at 5,300. Why 5,300 becomes important? It's where these gaps were on the way down. We consolidated right there for a day and we gapped up again. We get below that gap. odds are, I mean, look at this one too. This was a gap. We closed down here, open back up here. It's actually a gap right there. This was very enthusiastic, gappy price action here. We're still down 10 points, even though it's a green candle. So we gap down, rolling green. This is a situation. And if you got caught extremely long here, and yesterday was a nasty day for you, I'm sorry. I tried to warn that we may pull back in here. I still am convinced we're probably, I mean, it's like 75% odds we're going up here before we break down below this low. That's the odds. I mean, that's right there. You know, 70% on the SPX chart. That guy right there indicated we're going out here, going up here. 33 bars is how long the average takes. It could take 66. That's daily bars. That means it doesn't count weekends. And that means we're going up here 71% of the time before we break down here, before we break a lower low. Now, that also leaves almost 29% of the time that we fail this pattern. But when you combine it with SPY, 65% of the time, SPXL, 74% of the time, even looking at QQQ, 84% of the time, there's a high likelihood we're going up. Kind of stacks up. Even IWM, 79% of the time. So it looks like if you can hold on, we may be going up, but know where you're wrong. Like, have an exit plan. That 30% of the time it fails could play in to right now, and we could fail. Right? There's always the chance of ultimate failure. Always. Now, you may be sitting there going, well, what the devil are you even talking about these statistics? I don't even understand. I'm new here. Well, welcome. Welcome to the channel. Be a subscriber. Make sure that you can chat and let me know that you're new here. Subscribe to the channel. Consider being a channel member. Got extra content and stuff. And let's just go to relatively clean charts. Pull this off and ignore what we have written here. This is the pattern I'm looking for. So you saw the orange line. I call it the roadmap line. Now, the most basic pattern I'm looking for most of the time is a move that comes up like this, comes back down, finds support in the vicinity of this roadmap line, and then we make the next move higher. Now we draw a fib line like this, and when we get the candle close, it works on all time frames. It's not just daily charts, but I tend to look at daily charts on YouTube. When we get the close of a candle above that 618, after we've done these other things here, that's the entry. And it becomes highly likely we're going to extend right up to the 1272 area. Now, I commonly hold that all the algos in the world can easily calculate these levels. So they're kind of fuzzy zones. Sometimes we come up short, sometimes we go over enthusiastic and go blowing past them. So my target for a conservative trade is 90% of the way to the 1272, which becomes the 1.1448 right there. So the high probability trade right here becomes that move from the 618 up to the 1272. 90% of the way to the 1272 right there. That trade. And I go hunting for that all the time. That's a high probability trade. That's probably the highest probability trade I look for in the market right there. And the statistics I pull up usually are tuned to that particular ticker and how well it's performed this pattern in the backtest period. And it's variable. Like, there's a lot of things that go into this. It gets a lot more complicated than this. Just keep it as simple. That's the pattern. Now, this pattern does work upside down. All right, remove it all off here. We could also have it upside down. You got a roadmap line going down, or, you know, we pop down. You know, you won't have the future out here, of course. Then we, oops, click the plus button. Awesome. come back, retest from below, same fib line, upside down. When we break the 618 to the downside, it's highly likely we're going on down to these target areas. Now, I don't usually trade that move. This is not the move I typically trade. I find the downside to not be as lucrative as the upside for these. It's got a little more chaos to it. The win rate doesn't seem to be as reliable. Same pattern, works out a lot of the time, but there you go. That's the basic market roadmap pattern on the upside and the downside. I look for it all the time. Now, there's another pattern that I look for. It's more of a 50-50 thing. And when it combines together, it looks very similar. So it's a reversal pattern. So for a bullish reversal, you've got a downtrend cooking. We come up in the market, and we're reversing, and then you can see it looks very similar. It just doesn't have the orange line involved. Now what we're looking for is this to set up. We don't really care necessarily about the proportions here. What we care about is this holding the 618 right there. Think about it. Before we were looking for the 618 to break. Now we're looking for the 618 to hold. And this indicates what I call a measured bounce. These patterns play out all the time. Now we're looking for a potential into this zone right up here using a different fib target right here. It's a lower probability trade for working out in your favor, but it has a much larger upside potential for your account. And this works upside down and right side up. We'll go through a few of these examples on real live charts today. So this right here, Kimberly's here, but she's late. My favorite subscriber. So this is a what I call a measured bounce, and it's the other pattern I look for. Now, you may hear me refer to Elliott wave. This is an Elliott wave pattern, and it can be either a 1-2 or an ABC. It doesn't matter. If it's an A, B, C, right there, we usually stop at this target down here between the 100 and the 1272. If it's a 1-2-3, missing the 4-5. This is a very fine, subtle difference here. If this is a 1-2, the 3 is usually up here, the 4 here, and the 5 up here. Typically something like that. So we're trying to catch a piece out of the middle. This piece can be a bigger piece or a smaller piece. The 1272 gets hit more often than not, no matter if it's a ABC or a 1-2-3. That's a very common level between both patterns. So it typically is the top of my target range. If we stop at the 1 and then start reversing, that's a bummer. That's a minimum pattern. So, and this one works upside down and right side up. Occurs a lot upside down. I'll actually take the downside of this one. And for example, everybody wonders about my DPZ trade. I was talking about this last night, how this was the only green I had in my account basically yesterday. So this went a little deeper than the ideal measured bounce. I actually got into it back here in February as we were coming up to the measured bounce set up for the downside. We went a little further. I rode it upside down for a little while. Now we're starting down the path. That target comes out the 1272 to the downside. It's usually one of the only trades I will take to the downside is the measured bounce setup to the downside. Right there. All right. Any questions, you can let me know in the chat. It's not really I'm just going through the patterns so that everybody kind of knows what I'm looking for as I go through the charts here. Now, we keep track of a few other things here. We look at the S5TW. That stock's above their 20-day. This dropped pretty violently back below the 80 line. We don't typically, as I said yesterday, we don't typically hang out above 80 very long. We didn't even hang out there more than a day after I said that. Big pullback. S5FI, stock's above the 50-day. We dropped back below. Didn't hang out above 80. We don't typically hang out above 80 very long. Higher high than this one, but not than this one. This one's still higher, and this one's still higher. Can we run it up to 100? Maybe. I doubt it. That'd be 100% of the S&P 500 stocks above their 50-day moving average. This is a percentage. You can just read it like a percent. So right now, at the close yesterday, we had 70.97% of S&P 500 stocks above their 50-day moving average. We haven't been down to the bottom in a long time. This is a giant market oscillator. We tend to take them all to the top, take them all to the bottom, and that's kind of the way this works. I've been talking about the fact we're probably going to the bottom for like 9 months now, it seems like. One of these days, we're going to go down here. So that bigger correction is hanging out there in the market. One of these days, we're going to do it. Stocks about the 200-day. We were last at the bottom back here in October 22. It took us until right here in April of 24 to get out the top. Eventually, we're going to take this back down to the bottom. It may be 25, maybe 26. Eventually, we're going to have 20% of stocks above their 200-day moving average. Once again, it's going to happen. We go from the bottom to the top, to the bottom, to the top. This one can move a little slower. Of course, it's the 200-day moving average. I don't typically use the 20, the 50, or the 200-day moving average on my charts. It's just something I keep up with because these handy-dandy indexes are already calculated for me. It's something I can pop up and look. Now, the 200-day, funny enough, tends to be right in line with my roadmap line. If we were to chart it together, they tend to be very in the very close vicinity of each other. So, ES, what are we watching? What are the levels? There you go, that 618 level coming in just below us here. 54.89. That was the heart of the danger zone. We may test the bottom of it. We may come all the way down. 54.23. At SPX, we've got that gap. We may go fill that gap. It may happen. Anything's possible. The market can do whatever the fudge it wants to do. Be careful. Perma-cautious. NQ. This thing getting really close to a 618 retrace. Look at this, baby. Look at that. 618 retrace. Look at that. Really dang close. We got to a 50. This would be a measured bounce. This could set up the market for an explosive move higher if we were to dip in here and hold it. Remember that pattern I was just talking about? How we retraced to the 618? That was dropping, moved up, retrace, hold that 618. If we do that, look at the level right there. Comes into play. New all-time highs. And if it's bullish, potentially 22,000 up there. That'd be one heck of a move. One heck of a move. Maybe like, well, NQ, what the heck is that? It's the futures for the QQQ. So basically, we're looking at this measured bounce playing out right here on QQQ. That's low, it's high. If it dipped right in here, we hold it. Sets up a potential move from this 447 area up here to like 527. We're like, holy, whoa, that's like a $60 move. Yeah, that's why I like these setups. Now, it's not high probability. It's not highly in our favor that it works out, and it could be even a 100-point move right there. These are not as high probability as the roadmap bounce. Roadmap bounce right there. The target would be right there, 511. And we're not going to trigger it, really, in earnest. I mean, you could get in now because it already fired off, obviously. You could get in now. You could add to it. It might fail. Statistics right there. 90% of the time, this works out on the 4-hour chart. We already kicked it off back here. 91% of the time. That's pretty high likelihood. At 33 closed trades, that means it's statistically significant. this works out more often than it fails. So 9% of the time we fail. This could be one of the 9%. Could be one of the 91% that works out. This is why I think we're still going higher in the market. History says we're likely to keep going up 91% of the time. Even though things look pretty bad the last couple of days, last couple of months, really. It sets up these trades. Do you have the resolve to hang into the trade where everything burns down around you? And where are you wrong? And GTFO down here. Russell? This one fired off back here and promptly did a correction right after it did. And still has a high likelihood of an upside, 89%. 9 closed trades, that's not really a statistic population. So that's not working for it. But right there would be the upside, 30 days. Now you're like, well, how do I figure out what 30 days or 29 days? You can use this date and price range tool right here. It comes from the 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 5th button down. Pull it out right here. Go down to date and price range tool. Under measurer right there. I have it favorited, so it hangs out on my little favorites toolbar here. You can go from the entry trigger, pull it over to get to 29 days, and you're like, hey, well, there's the day right there, October 7th. That would be if it meets the average. Now, think about averages. You have two in your pool. One's above average, one's below average. 2 drivers on the road, you and somebody else. One of you is above average, one of you is below average. Now, the average may be higher or lower, depending on the 2 people on the road. But think about it. Is it you that's below average, or is it the other person? Most of us would say it's the other guy. I guarantee you, that's human nature right there. So we're always thinking we're going to be above average. We're going to go faster than the average, but maybe this is the one that goes slower. You need to have in mind that this could last twice as long. Maybe out to November. Maybe 3 times as long. Maybe all the way out here to January. Before this plays out to either the target or the stop. And we could just chop sideways in here for the next 6 months. That would suck. It'd eat us all alive, I think. Anyway, that's my least favorite market, is just a choppy sideways market. Oil, and this thing being interesting. Things are getting interesting right now on oil. We are out of the bottom of the watermelon seed squeeze. Confirming it with today. May drop here. If we hold support here and turn very violently, we're probably going to break up and go higher. If we break down below this support right here, watch for the drop. Now, this is a little bit different pattern than the 2 I started out talking about, but it's still built on the same principles. There's that 3.2, 1, 2, 3 extension right there. Gold being funky cold Medina right there. That looks like it wants to retrace. I think we want to test the breakout again on gold. Gold may pull back before it can break out. Silver already got the retest of the roadmap line. Went deeper than I thought we might. That's fine. That's okay. There's no problem here. It just went a little deeper than I thought we might. And next target up. Got to break through that 618 zone up there. This retrace. Back to the roadmap line. Move it up to the 618. Hold here. Move on up. Now, if we break below this low, we're probably coming down here. 22. That's the bummer. So there's the upside resistance and the downside support below the current support, which is the roadmap line. That's silver for you. Bitcoin all-time history. We're just hanging. This may dip a little lower. May. So here's what we got going, cooking right now. Pull this down. We've got that 618 level. If we can hold it, that can propel us up for that roadmap bounce. I mean, measured bounce. Measured bounce. We've already done the roadmap bounce and failed it. Went lower, right there. Now we're trying to work on the reversal. Like this was the downtrend since March. Can we reverse it and break out of here? That's the question. Are we done? I don't know. If we break down below this 618 to down below the 76, we're probably going on down these levels right here. Probably that measured bounce from the below, bounce off the bottom, and come down here. That's the long and the short of Bitcoin. ETH USD. This didn't even get up here. This reversal not looking very strong. Is holding a 618 so far, but I'm not feeling as confident here. This one may need a lower low. May dip down to this 1950 area right down here. Actually going to set an alert if we get a lower low. Anything lower than that prior low can finish out this pattern. That's what we got. Dollar still hovering. This may get another flush right in there. And next layer of supports, and then my target that I've had for more than a year now, almost getting close to 2 years now. Looking for the mid-90s. And it could take us out till middle of next year to get there. NKD, this thing pulling back pretty violently off of that resistance. I mean, look at that. Yikes. Couldn't break higher. This makes me nervous. Will this spill over in our market? Very well could. Is this pulling back because of our market? Maybe. So we've got this right here. You know, I think America elitists like to think that the rest of the world don't matter. I think the financial system is so worldwide integrated that sometimes stuff like this matters right here. That's why I've been keeping an eye on it lately. We get another big flush. That could spill over into our market pretty dang easily right there. Don't be so arrogant to think that we're immune to liquidations in other markets. Especially when Japan is the biggest buyer of U.S. debt. All right, stuff that was popping. GitLab. Bum, 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 bum. Right there into the roadmap line, lower high. Nothing getting me excited yet. Gonna have to break above that downtrend of highs. Still a deep retrace and may go lower. AMD is a popper, but I still expect this to continue down to the target here. ASTS. Wow. That was a ridiculous pop. So that's a bubble pattern. Consolidate. And probably come back down. This is a little different pattern. This looks at this pattern right here. This is a human psychology pattern in market cycle. We are seeing this in NVDA. We're seeing this in SMCI. We're seeing this all over the place. We see it all the time. ASTS looks like this pattern to me. May consolidate and then break down. We tend to go exponential. People talk about how everybody's going to be rich. You just need to get in. And then it fails. Everybody moves on. Everybody gets sick of it. Yeah. SBIT, short Bitcoin, popping a little bit as Bitcoin drops. But this looks like it's destined to break lower. In all honesty, that is not a strong looking chart. And this is ultra short, so it's leveraged short Bitcoin. It will pop when Bitcoin drops, but that's a chart that looks like it's going to go down. As in, I'm not just biasing that. I mean, it pulled it up and didn't tell me what it was. It looks like a chart that's going down. Shark Ninja. Got Kimberly a new coffee pot that was a Ninja coffee pot. She loves it. It's like a K-cup, brew cup hybrid, but you can make as small as like 1 cup with ground coffee. And so there's Shark Ninja. Hadn't been public very long, and that thing's just rocking and rolling. Don't have enough candles to really determine anything here. Maybe at 98, maybe at 109, maybe 115. That thing is just rocking and rolling. Sky's the limit right now. Dun, 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 dun. Let's see. 39 billion. Okay. Yeah, the market cap's virtually nothing. Like, that's weird. Founded in 1997, but they just went public, I guess. Interesting. That one looks like it's going to rock and roll higher. ASML. Biggest decliners. So what I do pre-market, I go to Market Chameleon, pull everything moving up or down, $2 or more. Up $2 goes on the gainers list. Down $2 or more goes on the decliners list. ASML probably coming on down. Support down here around 687. ZS. Wow, what a smackdown. That I had the target down here. I was expecting resistance. Flush it on down. ASND. Pharmaceutical. Be cautious. Not one of my favorite things to trade. That move. Maybe headed right down here. SMCI. If you're new here, I've been talking about this. Going to drop since back here in January, February, before we made the $1,200 high, that we were probably coming back right down here. We're almost there. 200, 250, 300 area. That kind of satisfies my bubble pattern vision of this. We were on a bubble. Came down, did that consolidation. Moving on down. Right in there, fulfills it, but we could come all the way down to 100. Be careful. Chasing that one. I think I've talked about how that was probably not going to the moon for a long time. I mean, you could say 1200 was the moon. We went to the moon, coming back to Earth. That's what they do. DLTR. Oh, baby, coming on down. I need to send alert down here. I've been expecting that to fail on down. May go down to 40. How the mighty has fallen. Went from 170, lost 100 points. Whew. Be careful out there on that one. CNM, Corn, Maine. These guys produce hydrants. Pretty sure this is like fire hydrants. That's what these guys supply. That sort of stuff. Not really showing some strong infrastructure build out going on here. Man, look at that. Right off of that. Boom. And then coming back to Earth. Probably come back to 33. It's kind of the bubble pattern too, right there. You know, smaller scale, but look. Consolidate. Probably coming back right down in there. Same pattern over and over. Like even on stuff that you wouldn't even think was a bubble. Isn't that wild? It's an Elliott wave pattern. For a correction. Anyway, CRMT. Well, that's not doing too hot. America's Car Mart. Looks like we're going into the abyss. Probably going lower low than what we had back here. FNGU. Back to the roadmap line. Rejected off the 618. Could not close above. Right back down. This could come down here. Be careful. That's 3x leverage on the fangs. Leverage cuts both ways. Know where you're wrong. The thing to watch here. Just move up. That retrace. Hold the 618. We could launch it off. If we get below it, Watch out for the bigger, deeper retrace. PANW. Dun, 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 dun. Children. That child is 26. And PANW right there. Still got the target up here. I'm still long that stock with 5 shares. And APH. Yeah, all of our children are older than 18, even the youngest. He'll be 19 next month. Golly. That looks like we may go lower. That was the uptrend. Holding that area, bouncing down, breaking the 618 on the downside. Looks like set up to get the extension right here. I'm not trading this. That would be where I would expect support on APH. CRWD came up, found resistance so far, retracing. Here's the resistance, here's the support, and that's what we got going on CRWD. Till we can break through the resistance, we may have more downside to go, possibly all the way down here around this 90, 75 to 90, 75 to 100 area right down there. FERG, these guys do more wholesale distributors. They're more AC units and stuff, I think. Interesting infrastructure people getting hit a little bit today. That Core and Main and Ferg. Looks like Ferguson may come down to 175. RYAAY. Resistance here, support here. This could be a measured bounce. We could see this rocketing off of here like that. Held the 618. We'll break above the roadmap line. Sets it up for the move up here. Possibly 180, 200 up there. Bulls, leverage. Be careful. There's 4 things that don't follow patterns. Pharmaceuticals, biotech, anything the Food and Drug Administration of the United States is involved in, FDA. That's number 1. Number 2, leverage stuff. So 3x leverage stuff. Number 3 would be low price stuff under $10, equities under $10, not just cryptos or anything like that. Equities, stocks. And then 4 is China stuff. So be cautious on those 4 things. There's a few other things that like SPACs don't typically do it. IPOs are typically bearish. A few other rules, a few other things. So that not so great. Here's combining 2 of my favorites, biotech and leverage. May not follow the pattern. It's found significant resistance right here. May break down and go lower, even though it's fired off the potential to go higher. Just nasty chart. USD. Now you may be like, this is ultra. Ultra means leverage. Yet again, this may come down here. If it can hold in this area, could launch off. This could be a measured bounce inside a roadmap bounce, which can lead to an explosive move higher. I'll consider picking up a couple shares, but I'm not so sure at the moment on that one. NVDA, got lots of stuff moving down today. Again, same sort of pattern. Leverage on NVIDIA. Caution. HRL, Hormel, bouncing off the roadmap line to the downside and may have already hit the target. It did. Look at that. Already to the target. No entry, just bounced and right down in there. Could be done. Could be working on a bottom. No high probability anything at the moment. No nothing. No high probability anything. It's kind of funny on foods. So food prices have gone up, but corn's down, wheat's down, soy's down, sugar's down, pork's down, cattle coming down. Like all those futures for food are down, yet food prices still ridiculously high, and food producing companies all getting just teeth kicked out of them. It's just kind of funny. Flutter Entertainment. There's the resistance. There's the target. There's the support. PD. Ooh, right down to the target. Sometimes I get lucky. Just took a while. We could be hunting for a bottom, maybe down to as low as 15 here on pager duty. Dell. That's the bubble pattern. May go lower. Right there's support. If we can break back above the 618, we can go up for the higher target up here. NVO. Looks like we may crush it down. Finding resistance, going higher. This may need a bigger correction. That's GLP-1 drugs. They may change the world. We get above this orange zone. 152, 156, 166, 185 on the upside. Cold is ultra short, so leverage short natural gas. This may come crashing down. Natural gas looking kind of strong, actually. Looking like it might break a roadmap line and go cruising up here to $4. TSM, Taiwan Semi. Looks like we're going to do a retrace to the roadmap line. And then we'll see what happens. We can hold it and turn higher. ASAN. Ooh, that's probably going lower low. Rejected the roadmap line a few times. That's a downtrend. How low can she go? Let's be careful playing that game. They can go to 0. Looks like $9, possibly $7. MSTR. Back to the roadmap line. Once again. Now, this is not leveraged Bitcoin, but it sure does trade like leveraged Bitcoin. That could be a measured bounce. Now is the opportunity to potentially build a position. If you believe we're going higher, I'll be very cautious. If we get below 112, it's a relatively small $10 risk here on shares. If you're in options, you're probably going to get devastated with a $10 move down. Be careful. It's a high flyer right here. Shares, $10 risk for potential giant upside. Talking about $100 upside for a $10 risk. 10 to 1. Not bad. Not bad. I may take that. That's the kind of move I like right there. That's the kind of move. Now, bonus trades. These are set up on the roadmap bounce. There's the entry. 36 is the target. Dun, 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 dun. If you hung out with me and made it this far, give me a thumbs up. Give me a like. I appreciate knowing that you like the bonus trades. I did bring a secondary one that I didn't throw up here yet. Pop this over. Here's the statistics for this one right here. Target 37, $2.20 upside, 86% of the time, with 52 trading days and 30 trades. So that's a statistical population right there since 1998. That's as old as Karen is. Profit factor, 143%. That's pretty good. Pretty darn good. That's gross gains divided by gross losses, 2.43. So the wins are 143% bigger on average. Eat up the gains, eat up the losses on that. Pretty sweet. Pretty sweet right there. And then the other one I brought. Let's see if I can pop it up. VRSN right here. Bigger move, $9 move right here, 193, 24 trades, so not a statistical population, but 79%, 2.486 right there, about the same length of time, 52 trading days. So VRSN. This will be the move right here. Fair sign. Yeah, 193.96 right there is the target. Right in there. Entry is now. Looking for that move. Right there. All right. If I said anything that was helpful, beneficial, give me a thumbs up. And I appreciate all the channel members. Sledge, thanks for being a member. Thon, thanks for being a member. Everybody, thanks for hanging out. I'm going to wrap it up here. I'll be back live 9:15 tomorrow morning, doing the same thing over again, looking for what's moving for the day, looking for the opportunities, trying to chase down awesome potential in the market. Hope you have a great day. Be safe out there. Remember, the account you save may be your own. I'll see you later.